I welcome everyone to the Sygnum House View in September. Our take on the crypto markets, what lies ahead, themes in the market, and also exploring underlying drivers, and also what triggers could potentially change the sentiment and the investment landscape. Today's theme is the hidden potential amidst market uncertainty. So I'm joined today by my colleague Katalin Tischhauser, Head of Investment Research here at Sygnum. Hi, Katalin.
Hello.
So you see you're back from a very sunny, relaxing holiday, but it seems also that the markets are relaxing too. So we'll talk about should they be relaxing today. So let's get into it now. So certainly the crypto markets are flat. There's little sign of life recently, low liquidity volumes and volatility. But there's been quite a lot of good news, you were saying, but it hasn't affected the sentiment or the market. So can you talk about what you think is going on here, Katalin?
Yes, indeed. The news in the last 3 months was clearly good. Prior to that, the first 3 to 6 months of the year was difficult. The market, I think at the beginning of the year, was quite ready to shake off last year's bull market and rally. The year started with strong sentiment, and mostly on the US regulatory front, the news was difficult. And a lot of dampeners were put on the market sentiment, which eventually ran out of steam. And since then, we're living in this very odd situation where basically the market feels like a bear market. It behaves like a bear market. Positive news is overlooked. Activity is quite low. It's very difficult. There's no excitement around narratives. People are not really getting on board. It's really all the mark of a bear market. But at the same time, actually, crypto is up almost 40% year to date. So it's really the best performing bear market in history. I would say.
We're also seeing quite low exchange volumes, which kind of indicating that people are moving them off their exchanges and not thinking about trading at short notice. What would you say to one of these hodlers who was thinking about liquidating their position now in this market? What would be your advice to them?
Yeah, I would say the current situation, I would look in the other direction. We're really in an unusual situation where a lot of positive developments in the last couple of months have not actually affected the market. Or sometimes the prices rallied on the news, but then all the performance was given back afterwards. So, basically the biggest news of the last 3 months is the spot ETF filings, and specifically the BlackRock ETF filing. It's very significant, extremely positive. The approval, we cannot guess the probability, but generally market commentators rate the probability high. And very significantly, Jay Clayton, who was the previous head of the SEC, said the approval is inevitable. Yet, there is nothing in the prices. The price of Bitcoin is lower today than it was before that announcement, which basically technically means it discounts a 0% probability, which is clearly absurd.
So moving to the macro outlook, which you were talking about before, it's rather gloomy. I mean, certainly inflation remains and perhaps is lower than actually forecasted or expected. Oil prices are up. Jackson Hole, though, talking about further rate rises or maintaining that. So one of the questions I think is important is, why is this type of macro traditionally good for crypto?
It should be good for crypto. So it's basically the global macro news is very difficult. It's not positive, even though some of the market participants interpreted the Jackson Hole messaging as a Goldilocks scenario. I think there's a lot of evidence to the contrary. In fact, I would say that what we're dealing with is not even a cyclical situation. It's not even about seeing where we are in the cycle. I think the problems are deeply structural. And not only are the problems structural, there are no solutions being proposed to the structural problems. So for example, if you just look at rate hikes, they're supposed to address inflation, and to some extent inflation, well, not to some extent, to quite a significant extent, inflation figures have come down. They have not come down as much as the central banks would like them to. Now there's upward pressure with, like you mentioned, oil price rises. Christine Lagarde at Jackson Hole said, it's a new paradigm. We'll have to think about new ways of dealing with it, and we have to read a lot of things. So it's definitely a difficult situation. But even to the extent that the rate hikes have worked in bringing inflation down, there comes a point, and there can be a certain situation, and we may be in that situation where actually rate hikes are inflationary, not disinflationary. And that would happen when the government indebtedness is so great, which it is in the US currently, and with the debt ceiling gone, there's now no brakes on it, that the interest rate costs are such a large cost item and fast rising that ultimately money printing has to be the solution.
Yeah, I mean, many people may well say, look, I've seen this movie before. That this is a good conditions for crypto, but still the market.
Right.
How do you explain that?
Right. Right. So it's basically crypto was created to address these structural problems in the global monetary system. And that case is still very much in place. That argument is still very much in place. And when we see this difficult situation develop, like we have seen in the past, let's say past year, especially accelerating on the global macro front, it underlines the argument for why this ecosystem was created in the first place. So, when people say crypto is a macro hedge, it absolutely is. It's an alternative system. It's still nascent. It still has teething problems, but it's an alternative system that is basically like precious metals. It's basically a hedge and an alternative. It's not, it never was intended to be a tick for tick inflation hedge. So I think when people complain that when inflation ticks up, Bitcoin doesn't tick up with it, it's not a tick by tick hedge like you would buy futures to hedge a market position, but it's like precious metals. It's an alternative proposition, and the arguments for it are there every day, and we just find more and more evidence as the macro picture deteriorates.
And certainly another theme has been the kind of the coupling or decoupling of traditional and crypto markets moving together. I mean, do you see the situation now as being a cycle, or do you think this is returning to what you would normally expect from the market dynamics?
Yeah, I mean, it's been analysis on crypto correlations, long-term volatilities, correlation with asset classes. A lot of that has been done by ourselves and by many others. And crypto is historically, traditionally uncorrelated with other asset classes. That's what crypto has always been. So the anomaly was the past year. And the anomaly is over. Crypto's always been uncorrelated, and it has been all this year again, like it was before. Now, it could change in future, depending on how the asset class evolves and how every other asset class evolves. There can be a scenario where crypto becomes more sensitive or more correlated with macro for good reasons, but we are not in that situation. There is no reason for crypto to be correlated with global macro.
Okay. So moving
on, at least could be negatively correlated. Yeah.
So a while back, Bitcoin pumped with just the prospect of a spot ETF being approved and launched, which is subsequently settled back. Why do you think Bitcoin, certainly relative to other sectors, has been more resilient in this market?
So Bitcoin, it has been the case historically that bull cycles, long bull cycles following bear cycles in the crypto market always started with Bitcoin performing. So Bitcoin has always led the recovery. When we initially saw a Bitcoin-led recovery in the crypto market earlier this year, everybody ticked that off as yes, that's always what happens, and the rest of the market follows. Now, this was actually exaggerated and accelerated this year by two factors that were specific to Bitcoin. One was the banking crisis that suddenly actually pushed a lot of demand towards Bitcoin, well, towards crypto, but basically Bitcoin being the beneficiary of that as an alternative to the banking system. That was very specific and highlighted that use case of Bitcoin. And the other one was that suddenly, even though this has always been the case, and actually upgrades have happened on the Bitcoin, around the Bitcoin blockchain that enabled this, actually the upgrades happened a while ago, but it only this year activity where people started using Bitcoin as a smart contract platform quite a bit started happening, and really transaction volume skyrocketed. The BRC20 token standard, which led to the issuance of a lot of tokens on the Bitcoin blockchain, the ordinals, inscriptions, the sort of Bitcoin NFTs that really took off at the beginning of the year. And this also meant that quite a lot of transaction fees were generated. So suddenly Bitcoin miners were earning quite a lot in transaction fees, not just in block rewards. It really changed the economics for Bitcoin in a very positive and very encouraging direction. So that was specific to Bitcoin. And I think these three factors put together meant that Bitcoin outperformed a lot more even than we would have expected it.
Certainly, there's a recent research from Henley and Partners in the UK saying that of the global base of crypto users, over 50% owned BTC. So certainly that size by itself and awareness will really help. But also many see in the current doldrums in the market, a spot ETF being a catalyst. I mean, do you agree with that? And what do you think would drive that hypothesis?
Well, it has to be. It would drive so much. And it's not about the spot ETF. there are already Bitcoin ETFs, and whether it's a spot or a futures ETF, to be honest, I don't think that matters so much for investors, for end investors, right? It's not that the end investors, retail investors around the world, or specifically in the US, as that's where the regulatory approvals are happening and are contentious. I don't think that US retail investors, what they really want is a spot ETF. I don't think it's about that. It's about BlackRock. It's about BlackRock filing to launch an ETF and bringing the world's largest asset manager, right? Like potentially bringing their extremely substantial client base to the market. It's also a vote of confidence. It's also serious involvement by the largest traditional finance institutions in crypto. So the ETF is the label on it, but it's not about whether there is a spot ETF or there isn't a spot ETF. It's very relevant for Grayscale because that would totally change their situation with the discount on their Bitcoin fund and Bitcoin trust and probably the other trust as well. Now actually spot Ethereum filing has also come out just very recently. So, but the real catalyst is if there is a BlackRock ETF. That's very significant for the market in terms of the potential fund flows into crypto.
Sure. So moving up perhaps from the layer ones, you were talking to me about some bright spots in the market outside this area. Well, could you give some examples of what you see some promising development for?
Yeah, so there's actually quite a lot, and the really significant the most significant ones in terms of affecting the whole market were the regulatory news that have been positive in the last couple of months. The Ripple ruling, the Grayscale ruling, the Uniswap ruling, these have been surprises and very positive surprises. Nothing is conclusive, everybody's appealing, everything goes on, but the tide has clearly turned. Up until then, the news were much more negative on the regulatory front and depressing. That has really turned, and it's now looking actually quite promising, or it has taken some problems off the table. And in terms of project fundamentals, like you mentioned, there are both individual projects and sectors that are in a very good spot and that have seen very interesting developments. Recently, the layer 2 sector, I think, you were alluding to or hinting at. Basically, in the last 6 months, transaction volume on layer 2s has doubled. And we're still in a slow environment where there isn't a lot of growth in transaction volume. So it's not that everything is growing and layer 2 is benefiting, rising tide is not lifting all the boats. It's layer 2 taking a lot of market share. Also, they had these very important mainnet launches and innovation coming to fruition with the zero knowledge technology, alpha mainnets, beta mainnets launching, the token issue earlier in the year of the largest in terms of market share layer 2 project Arbitrum. And all of these positive developments actually, while transactions doubled in the last 6 months, the sector halved. So that's clearly entirely out of line, and there are some reasons why, but it's mostly those reasons have either been since then taken off the table. For example, the threat of these tokens being, Polygon being a security very big in the sector, or it's the lower liquidity that basically means that even smaller trades move the prices significantly, with market makers withdrawing or not entirely withdrawing, but certainly reducing their presence. The liquidity available has declined. So that meant that when there isn't a lot of activity, if there is some selling, and that selling may be even just technical. So, for example, some of the bankruptcies of last year have to liquidate certain positions. This is not an expression of a negative fundamental view. It just has to happen. And these kinds of trades can move a less liquid market quite significantly, and that's been to the downside.
Yeah, I mean, just going back, you were talking about last year and continuing on a pattern of regulatory tightening and some
in the US. So some other jurisdictions went the other way.
Yeah, exactly. But in that jurisdiction in the US, we've also seen some bright spots there, a series of court judgments and rulings with more positive language as you alluded to Ripple and Grayscale.
Yeah.
Do you see this as being a kind of the battle between jurisdictions and institutions, or do you think this is a constructive dialogue in terms of getting clarity for investors?
I think so. I think within the US, there's varying opinions in the US government regulatory space that disagree with each other, and where it's going to land, we'll have to wait and see. A lot of supporters of crypto, even some of the presidential candidates, are extremely pro crypto. Also in Congress, also within some of these institutions like the SEC, various very constructive voices, and then various not less constructive voices as well. So I think basically the US, being that kind of a system where there are a lot of voices and a lot of dialogue is taking place, maybe a little bit slower than in a less sprawling system. I think it's likely that it will eventually end up in a sensible place. So we're just going through kind of the process as far as the US is concerned. I don't think that there is evidence to say that the US is trying to stamp out crypto or any kind of, there was talk of like choke point 2.0 and so on. I don't think that there is evidence that that is the case and that's where it's going. But then if you say a battle of jurisdictions, I don't know if it's a battle, but certainly when the US has slowed down and firms did not want to necessarily be based in the US anymore if they were doing crypto business, or if they were already in the US, they were looking to curtail their domestic presence and look internationally. Certainly, a number of jurisdictions took advantage of that and are taking advantage of that, getting legislation out that's favorable and attractive to firms. So we could see, so for example, after the end of the ICO boom, before Asia was the hub of the greatest activity in crypto, and with that crashing, with the ICO boom crashing, that moved to America. And since then, the US has been the greatest hub of activity, but that can pivot back to Asia or somewhere else.
Yeah. I think we're just about out of time today. I guess sensible is a good place a good ending note. Thank you, Katalin, for joining me today. Thank you, everyone who's tuning in. Hope you've enjoyed the insights from Sygnum here. Please visit our website and follow us on social media. And just to reiterate, everything today was not investment advice, really was for informational purposes only. So with that, see you next time, and thank you, Katalin.
Thank you.